Hello, welcome. So it's been a while that I give an update. I think it's timely to do a quarter one update for 2026. To all of you who have been following me, thank you very much. I always share with people that despite my low quality video production, there is still people that comes to me. I'm very happy to see some of you stepping forward through my YouTube channel. As always, if you find it meaningful and if you find this information sharing helpful to you and your family or your property journey, please feel free to like, share, subscribe, or even just share this video to people who you think that will benefit from this video. So, okay, without further ado, let's prepare. Let's open up what I have prepared for today. As mentioned, we are all property agents, so doing all these slides can be very tiring. So, if you just help me to press a like, I will be very happy already because, like I mentioned again, prepare slides, talk about this on the 45 minute. Today I try not to keep 45 minutes. Talk about this in a lengthy video format is always requires effort. So okay, 废话不多说, cut the long story short, let's start. Okay, sorry, let me turn back all the way up. Okay, wow, see, I prepared so many slides for you. Okay, so I cover my face already. As always, if you want to reach out to me, my number is at the top right hand corner. So 2026 quarter one, HDB and condo updates. Big changes may be coming. Okay. Click next. Okay. So as usual, disclaimer, all these things are disclaimer lah. So do your own due diligence and everything. All right. So I think this has been talked about very frequently already, but I would like to highlight a bit more things about what's happening on the ground, especially with my recent resale HDB listings. In fact, some of them are practically not moving as fast already. Okay. Quarter four last year tracked a zero growth, right? It's the slowest price growth for the past 6 years. Price growth, I don't know some of you who are already in the market or not, but I've been in the market since 2011, thereabout. Yeah, and I've been noticing how HDB and condo move over the past 15 years, right? The COVID frenzy is coming to an end. So we understand that the resale volume has softened, and that means that the buyers nowadays have a lot more options. So today, a buyer come and look at resale HDB, right? In a cluster, I call a cluster, that means a series of like 400 to 450 blocks lah, like the block number 400 to 450. In a cluster, usually, typically, people will look at about maybe 5 to 7, do a comparison. Then maybe if they are more motivated and more urgent, right? Likely they would have made a decision already. But today, there's really a lot of options in the market for buyers. So if you are selling an HDB resale market right now, you will know what I mean, that depending on your micro location, some locations are still doing pretty okay, but some locations is actually facing very high competition right now, high supply, right? So market activity is actually normalized, right? I will use the word normalized because this is actually considered normal market. This is not a slow market, or this is not a price drop market, because we are still seeing some form of growth, but it's much slower. Okay, so price never drop. In case some people will say or claim that I'm trying to cause what's that word? Fear mongering. I'm not. I'm just saying that the market activity is normalized. COVID years is not normal. Okay. Likewise, government is actually ramping up a lot of BTO supply to further moderate resale prices. This is the current housing minister, Cheong Tat. Right, the high supply of BTO and short waiting time HDB, right, is actually what I call an invisible cooling measure. That means to say they cannot do any policy tweak anymore. They cannot. I don't think they will do this. Like for example, now HDB buyer have to do 50% bank loan, and then jalat already. So the only way that they can so-called move the HDB prices is to introduce a lot of new flats into the market, which for me, I'm quite a political interested person. So the next election is actually coming up 2029 or 2030. which also means that there's only these 3 to 4 years to show that the government is actually working very hard to make sure that housing is under control, right? And if you have followed the election very closely, the young Township Condo is also almost lost. I think it's boundary, is it? Yeah. So you can see that a lot of young Singaporeans, they are feeling a little bit not so happy, a little bit disappointed that the housing growth is moving so fast, faster than the income growth. So there's really a lot of unhappiness in some of the younger population when they are coming to buying their first house, right? And when there's a lot more BTO coming up, it also means that some of these existing owners, right, they will be taking keys of their new flats, which also means that some of these existing owners will be putting up their resale flat on sale. In fact, recent past few months, right, I have already been getting a lot of interest for people who are getting their keys in Tengah. Tengah Township is some of the BTO is already, some of them, they are collecting keys in April, May. So usually it's always like that. We will see a higher uptake of surrounding township people, maybe people coming from Choa Chu Kang, Bukit Batok, Bukit Panjang, Jurong. These are the existing resale owners. They put up their existing flat for sale. So that also means that it will be a higher supply in the market, right? And for those first timers who still qualify to get a BTO, which who, if let's say they don't have high urgency to go and stay in a resale flat that fast, right, they would actually turn to this BTO and short waiting time flats. In layman terms, in plain language, the government wants to go towards a direction or path that the HDB is moving towards zero to low growth. Okay. Now, Q4 2025, as mentioned, you can see all the breakdown over here, quarter to quarter growth. The abnormal year is 2021, 2022, and 2023. Sorry, 2024. We can really see that the buying momentum has dropped, and the abnormal, I call it abnormal, the abnormal growth of almost double digit per year is unlikely to happen. In fact, double digit growth is very scary and it's not sustainable and it's not healthy for the HDB market. It will cause a lot of anxiousness in people if let's say that they realize that they can't afford to buy their house, right? Again, it doesn't mean that the HDB prices are dropping. It doesn't mean that way. Okay, it just means that the market is returning to normal. If you want to see price drop, you can see back then in the year-on-year change is 2013 to 2017, 2018, that period. So people who are already in the market back then, if you bought a house during 2011 to 2013 and you're trying to sell it 5 years later, some of them, they are actually facing negative sale. So hopefully not, because of the strong and harsh TDSR cooling measure that's implemented back then. So the market sort of go into a reset mode, right? I call it a reset mode, but I don't want to explain too much. Too long story already. Okay, so with this high supply of BTO coming into the market is returning to normal. Okay, again, I repeat that. 2 to 5% growth per year, I will consider it as normal. Anything above 7, approaching, in fact, 12%, I think is a bit crazy. If HDB grows 12% per year consistently, I think everybody will all in HDB already. You can buy as many HDB as you can, because it's crazy to have this kind of growth for property class, right? Now, this is something that a lot of people has been asking me, right? This HDB wait up period for private property owners, right? It has already given a strong hint, a strong signal, right? So with over 50,000 new flats to be launched, right? Housing Minister Chee Hong Tat has already mentioned that this policy may be relaxed before 2027. So how the government works is always very interesting. They always like to use data, use information, use logic to justify, because in order to appease, in order to so-called convince the general public that, hey, when we do this policy tweak, is because we have already make sure that there is 2 to 3 quarters of zero to low growth for the resale HDB before we remove this HDB wait-out period. Because remember that back then when they announced this policy, right, it is because they are noticing that there is a lot of people who take profit from the private property, and some of them they are making like 300,000, 400,000 from their condo sale, and using this equity, right, they come back to the resale market. Is very unhealthy lah, to compete with some of these first-time home buyers. So in order to justify that this thing is reverse, they will have to make sure that maybe it's about 2 to 3 quarter of zero to low growth for HDB resale market before they are able to relax this tweak, this policy tweak, right? But again, I always share with people, when this thing is announced, right? For example, in quarter 3, 2026, it is announced. The likelihood is that there will be a lot of mass market condos owners will put up for sale, right? Because the reasoning is very simple. A lot of them is sitting on the sideline. Hey, John, I don't want to sell first. I sell already, I have to rent 15 months. Then my profit also wasted into the rental. A bit stupid. Why not I wait for this policy shift first, then I sell my house. For those people have no strong urgency or no strong reason to sell, they are telling me like this. Then same thing. If that things does happen, right, would it mean that there will be a lot more resale listing happening in the private condo market? And in that turn, right, you also notice that a lot of resale flat owners will also put up their flat for sale, because they're thinking that, hey, now is an opportunity because there is a private property owners coming back to the HDB resale market. Then why not we try to sell at a higher price? So some of them may be thinking in this manner. So more resale flat owners may also put up their current house for sale. So the question I always ask back my clients is that, do you want to operate within the current known parameters, or do you want to operate unknown? That means in the future, we do not know. And your guess is as good as my guess, because we really can only speculate and discuss the possibility right now. So you have to think and consider for yourself. You want to operate within the known parameters or unknown parameters, which is better? Of course, this is just my smart, educated, calculated guess. I'm thinking it should be happening around quarter 3 of 2026. Some people are saying that usually they will announce in 2 events, either in the budget, which is happening in February, but I think it's too soon for them to do anything yet, because we are only seeing, technically, we are only seeing 1 quarter of zero growth for HDB resale market. So I don't think they would act so fast, right? And likely it will be happening in quarter 3 also, because I'm going to share with you later on more, is that actually there is a high influx of MOP coming in 2026. Now, this chart, this slide is also sharing that the BTO application rate, right, is a very strong indicator of the demand level on the ground. Whenever there is high BTO application, right, it means that there is a lot of pent-up demand. There is a lot of on-the-ground demand. And these people, if they cannot get their desired ballot number for their BTO, then they will give us, I miss my, for example, they try Queenstown HDB. I miss my Queenstown HDB already. Or then they should go back to the resale market to shop for their next best option, right? So every time there is a BTO launching, especially those that has very prime HDB estates offerings, Queenstown, Ang-Mo-Kio, Clementi, what else? Those hot favorites, every time there is a hot favorites township happening, we will see a slower pace, slower volume in the HDB resale market. Okay, this is the slide I'm talking about. In 2026, we will see a higher number of HDB flats reaching MOP, right? And this also means that these units coming up into the market will be competition to the nearby neighbors. So you can see the small chart, small image with the Singapore map. You see, Woodland area 1,005, Tampines area 2,000, Bedok South 900, Sky Residences at Dawson 1,200, and then another one, Sky Oasis at Dawson 1,100. Quite scary, So of course, if let's say you are someone that is holding on to a resale HDB flat that is potentially facing high competition from this newly MOP flat, then you may want to seriously consider to take action fast before all these things happen, right? And we are already seeing that some townships are already seeing slower growth, right? Look at the one that is highlighted in yellow, right? Bukit Merah, Pasir Ris, Serangoon. Comparing to 2023, you can see that the price change year on year. Some of them, they have already slowed down, right? Bukit Merah one, 12%, then suddenly dropped to 6%, 4%. Then Pasir Ris, 8%, then 7.2, 7.1. Serangoon, 9.3, then suddenly go to 6.8, 6.6. Right? 5-room non-mature over Punggol, same thing. You can see that 2023, 8%. In fact, the past 3 years, no, the preceding 3 years, 2021 to 2023, 8%, 8%, 8%. Then 2024, 2025, 6.8%, 4.5%. So the signs are very clear already, right? Same thing happening in some of the so-called prime estate, right? Mature estate Ang Mo Kio, also you can see that the year-on-year change in terms of the executive flats, right? They are already tracking a slower growth. Likewise, in the so-called non-mature estate, Bukit Batok, Hougang, Jurong West, Punggol, all these, they are already seeing a slower growth. Okay? Of course, I always like to use ChatGPT, use AI. I have actually input all the news article, all the data, all the whatever information I can fit into this ChatGPT. Of course, this is not perfect. I do my best to try to make sure that it is as accurate as possible, right? You can see that the best case scenario that ChatGPT has given, right? It's at 6% to 8% for 2026, and then they use one sentence to justify lah. If interest rates fall faster than expected and upgraded demand is resilient, while the supply of the MOP flat is absorbed smoothly, prices could re-accelerate into mid-single digit growth. This is talking about the prime estates, because the prime estates BTO is usually the million dollar HDB that will pull up the overall HDB price index. So this is the modeling that ChatGPT has given. Likely scenario, which is what we kind of expected, right? 2 to 4% with rising MOP supply, stable employment, no major policy shock. Market will structurally shift from surge growth, which is the 2021 to 2023 period, to a more controlled single-digit appreciation. That means, once again, I just want to say again, it's not a price drop. It's not a price drop. It's a single-digit low growth, right? Worst case scenario, they mentioned if, let's say, economic growth slow, employment rises, and cooling measure tighten the liquidity. So this is worst case scenario whereby there's a lot of things happening at the same time. Low economic growth, job employment becomes very weak, and government still implement cooling measure, right? They will tighten the liquidity, demand will weaken enough to flatten or even mildly correct prices. Price drop lah. This one is actually really is price drop really. So worst case scenario, drop 2% to plus 1%, right? Now, moving forward, low interest rate has been happening a lot of times already. And this also means that it is actually an opportunity for you to seriously to think about if you're holding on to a resale HDB that has already reached its so-called peak pricing. It is actually worthwhile to think about whether do you want to do a swap as of this moment, right? It also means that there's lower cost of borrowing. And if you want to invest in other investments, it might not perform on par in terms of the risk-reward ratio, in terms, given that Singapore is a very stable country, in terms of the Singapore property asset class, right? It may not be as worthwhile to pursue other form of investment. And likewise, is it still worthwhile to hold on to a slower growth HDB? Or maybe you can really explore going into private property, right? Again, all these things are the interest rate. Another rate cut may be happening in 2026. The UOB was mentioning that probably another 2 more happening in 2026, which there is still some opportunity window that you can tap into, right? So these are takes a lot of effort for me to pull out and all these things, right? Now, looking at the private market, same thing. We look at the past few years, right? You can see that 2025, the whole of 2025, right, it actually went up by 3.4%. Because if you look at it, rarely we will see that the private market will outperform HDB. The reasoning is very simple. Private market, we are talking about high base really. High base meaning you say your private property easily, you are talking about 1.5 million, 2 million upwards really. So for it to increase 1% is 10,000, 20,000, right? So HDB, if you just move 10,000, 20,000, in terms of a lower base, 700,000, 900,000, your percentage, it's going to be much higher. I don't know whether I explained it clearly. That means you start from a lower base to increase to a higher base, your percentage jump, typically it should be lower, right? Private percentage jump typically should be lower than HDB. But 2025 is the year that we see that the overall, the whole year actually went up 3.4% compared to HDB up 2.9%. So will we be seeing another season whereby the condo prices run ahead of HDB again, which happened during 2017 to 2019, that season, right? So will we be seeing that again? Maybe, maybe not, I don't know, right? Next, developers are still bullish. You can see all the recent land bidding, 9 bidders for this Danyan site, right? Another 9 bidders for this Dorset site, right? Another 10 bidders for Tanah Merah, right? All these are very prime lands that government is releasing into the market. And you can see that a lot of developers are participating, and all these are happening at very high prices. So why are developers still bullish, right? Because land banking or land development is their bread and butter. If let's say a company that don't do any project development, then how do they answer to their shareholder? How do they make a profit? Now, again, when we see news like this, why government cut private supply but increase HDB supply? This is something that we need to understand, right? MND trimmed supply of land to 4,005 private for first half of 2026. Right, this is even lower than the 4,725 that is happening in second half of 2025 and 10.5% lower than the first half of 2025, right? And you can see this is extracted from the article. I just zoom out for you to see. Prices of new private homes are poised to reach fresh highs in 2026 as supply tighten amid the still firm demand and growing cost pressure. Right? So my take is like this. HDB, it is actually for low-cost housing to solve the basic needs of family in a local population. Private, the government will allow a bit more free market. Of course, they will be monitoring the closely in terms of the macro indicator. So I feel that income growth, job employment, GDP, all these things are the so-called indicators that the government is monitoring to make sure that the buying momentum don't go too crazy. Because obviously you can see some years where the private market go too fast and furious, right? The government will step in and introduce cooling measure, right? But as of now, I mean, after the year of 2025 where we see so many new launches buying up like crazy, we still do not see or hear any hint of cooling measures coming. But finger crossed, let's see how it goes from here. The current land price that is bidded by the developers, right? It's going to be reflected in the future, right? Look at this. Zion Grand, which is last year one, Zion Grand was land awarded, right? Land cost 1,202 per square foot per plot ratio. They're selling at 3,050. We jump all the way straight. Bedok Rise, the one in Tanah Merah, is 1,330 per square foot per plot ratio. So I ask people this question: do you want to buy 2.5 million 3-bedroom staying in Great World City, or do you want to buy a 2.6 million 3-bedroom staying in Tanah Merah, right? So the answer is obvious. I'm asking a rhetorical question, right? The cost of waiting, right? Today, if let's say I have a budget of 2.2 million, last time I can buy a prime area, right, for a 3-bedder. But now I can buy city fringe. Future, I can only buy outskirt, right? So this is the cost of waiting, right? With the land cost steadily increase over the years, it is only obvious that the developers are going to price the new projects gradually higher and higher, right? Of course, I asked ChatGPT again, right? Key insight, this is part where most people miss. HDB and condo market are diverging structurally, right? HDB is supply driven, slowing down. Condo, because of this land cost, they are providing a price support, right? Which also means that in more plain language, HDB is decelerating growth. It's not price drop, once again, it's decelerating growth. Condo, sticky upward bias because developers cannot sell this new project at a lower price. They're going to sell it at a higher price. This is the reason why condo prices are unlikely to fall sharply. And the reasoning is very simple. These people that are holding on to these condo owners, generally speaking, they are the more affluent, more stronger holding power individuals, property owners. So unlikely they would dump their property price and unlikely they would do for sale in a sense, right? And if you look at it, I asked about 226. The ChatGPT give me a lot of good insights also. So they give me this base scenario, right? Base scenario projections for condo 3 to 4% in terms of the price growth, moderate to sticky upwards bias. Why? Because new launches will stay supported by the land and construction cost floors, price costs. That means they can't sell it that cheap. While resale will face more competition from competition and buyer choice. Expect winners and laggards by macro location, layout efficiency, entry price, right? All these will determine whether what you're buying is going to be well accepted in the future market by your future buyers, right? So buying a property is very, very requires a lot more science and art moving forward. It's not just I got money, I just buy. Is no longer that kind of market anymore. All right. Now, at this moment of time, some people were thinking like, "Aya, you say until so nice, so paint the picture until so rosy. You think it's so easy to go and buy a private property." Of course, this is what if lah. What if I lose my job tomorrow? What if I do this? What if I do that? So I always share with people, you don't drive a car thinking that you're gonna get into an accident, right? So of course you do your due diligence. You make sure that everything is done properly, and then you just drive your car in a stable manner. So likewise for property investment, make sure that you've done all your proper checks, make sure that you count your finances properly then before going in. Right. So anyway, this is our new company, our company new initiative. Think big. So this year the team is a team think big. So they're saying that stop asking what might go wrong tomorrow. Start asking what will give me certainty for the next 10 to 15 years. Right. Always I share with people in this manner. Interest rate in the future will go up or down, nobody know. Property price go up or down in the future, nobody know. Your salary, your own savings, will it go up or down? Nobody know as well. But one thing is confirmed, your age will forever go up. And your age will also determine how much you can borrow. And also it will determine how employable you are in your career. So do it while you're still young. Do it while you are still drawing a decent pay, high pay. Some of my clients, they reach out to me, they are already in their late 50s. They ask me, "Hey, John, so what do you recommend?" When I calculate their finances and all that, I will feel it's a bit of a stretch. So that's why I ask them to take it easy. At this moment of time, I think it's more of a position of consolidating really. Let's not take big risks anymore, right? Of course, I have this thing called the property journey blueprint, right? Numbers create clarity. I always run through this thing. I can't show you every single of my tab and everything. I just show the affordability. So usually, before we don't go towards the execution part, that means before we go and source for property, buy property, select property, I would like to sit them down and go through this thing with them, right? There's multiple tabs doing multiple functions. So this is what I created. So if you want to have a one-to-one consult, just reach out to me. So what does this Excel sheet can do? Calculate your loan affordability, calculate the emergency funds required, calculate your property price affordability, and there's various tools for different sort of planning, buy under trust, doing decoupling, sell 1 by 2, or sell 2 by 1. There's a few scenarios that I work out within this Excel sheet. So there's a lot of scenarios projection, how much my property is going to worth, if let's say we are doing an annual projection of 1%, how much does it cost if I go and rent? Should I go and rent and buy a new project, or should I buy a resale? There's a lot of scenario projection, because for me, I like to do numbers projection first, right? Then when my clients feel more confident, then they will know how to move things forward, right? There is also some of frameworks that I've learned from various experts in the industry for us to choose the right properties in the market, right? So, well, I think I try to keep it short, but I realize I can be quite long-winded sometimes. Okay, I show my face a bit. Now don't need to, yeah. So, closing ready lah. So feel free to reach out to me for one-to-one consult, understand your current life stage goals, financial positioning, plan for your next move with a few options for considerations, determine your project entry price and future exit strategies. Same thing, all my clients will get a lifelong support after purchase. Come to me lah, unless you don't like me anymore, then no choice. So rest assured that as long as I'm this line, we will always do a so-called portfolio review every 3 to 5 years if there's opportunity. If no opportunity, just stay put. Likewise, every life cycle, everybody have different priorities, different needs. So a piece of property can have different meaning to different people. So I always like to sit down to understand my clients first before I do any solution providing or options sharing. So yeah, this is me, and I hope that this sharing is beneficial. I'm sorry if I talk too fast or I sound too boring. I think this is some of the feedback I got from some of my friends. They saw my video and say, hey, can make it more lively, and say, this one data sharing, this one not TikTok sing and dance, so a bit difficult. Okay lah, so that's about it. I will end here, and thank you for listening in. Thank you very much. Bye bye.